So let's go there in terms of thinking about some of the investment themes that we think will dominate the headlines and the markets and correspondingly your investment performance during the course of this year, 2025. What's interesting as we sit here at the beginning of the year is that the business cycle itself, the economic cycle, appears to sort of be re-energizing. Corporate profits this year are expected to grow by 15%. And last year, in 2024, corporate profits grew by 10%. So we've got a business cycle that appears to be re-energizing, and corporate profitability continuing to be even stronger, or expected to be even stronger than what it was in the prior year. So from an investing perspective, we would encourage you to think about and look for those types of companies that are actually generating earnings, because the reality is that if generating earnings, and those earnings are going to continue to grow even more than what they did in the last year, that's probably going to be good for the individual price of that particular company's stock. So key concept is earnings. Earnings matter over time. The earnings of what a company makes ultimately drives its long-term value. So a particular concept that I think investors would be best positioned to make sure that they really focus on that in the year 2025. Looking further abroad, the U.S. continues to be the dominant economy, particularly as a result of its technological advances. All of this AI stuff is really boosting productivity at incredibly rates here in the U.S. I saw a statistic where there's now been 5 quarters in a row where productivity has been above 2% for 5 quarters in a row. If you look at the 5 years pre-COVID, there was only like 1, or I think there's 2 quarters in that 20-quarter period of time where you had that productivity gain of above 2%. So you're really starting to see some interesting gains in terms of productivity, particularly related to use of technology. Specifically this AI thing. It's interesting to see how we use that around the office right now. We use Microsoft Copilot. Not to plug a particular software, but like most businesses, we're all using the Microsoft suite of products, and that Copilot is the AI version of Microsoft. It's really a very valuable tool, and as more and more businesses start to incorporate that into their normal practice, that is obviously what helps to boost productivity. Another theme to sort of be aware of from an investing perspective is that if you're looking at a business or a company or an investment that has to borrow a lot of money, they're going to have to borrow that at higher rates than what they would have been able to borrow at just a few years ago. And so when you do that fundamentally changes your expense picture, right? Your amount of money that you have to pay to service the debt. If the debt is 6 or 7% versus, say, 3%, well, then that's a pretty broad spread. It also, of course, applies to consumers as well. So the investment concept there is to be careful about owning businesses or owning companies that have a tremendous amount of debt or have a need to borrow a lot of money in order to make their business model work. That can certainly be a pretty big drag in terms of the investment performance. Speaking of AI, the spend, if you will, on AI is really massive. And I don't just mean that as businesses of all size start to do more and adopt more of that. If you take just the big 4 that are looking to sort of be the leader in AI, and that's obviously Amazon and Google, Alphabet, Facebook, Meta, and Microsoft. Those 4 companies are collectively expected to spend over $500 billion over the next 3 years. Those 4 companies alone, the spend over 500 billion. That certainly got some major investment implications up and down the supply chain and into a host of sort of different parts of the economy. The other comment that we would make, which is a theme that we sort of saw develop in last year as well, is you're starting to see more companies than just the pure technology or pure growth companies start to do a little bit better, have a little bit more profitability. Traditional industries like defense or healthcare or energy or even banking, particularly with sort of a less regulatory environment, courtesy of the new administration, those are expected to do particularly well or see expanded opportunities. So the point of that is, as you think about kind of what that mix is, it's so important to check your overall sector allocation, particularly technology. Look, technology has been a big driver, not just for the past few years, but in particular last year as well. And but that pattern doesn't repeat indefinitely, and so that's why with our clients we always kind of run it's a Morningstar X-ray analysis, and that breaks out down all of the different sectors that are inside a individual client portfolio. It also breaks down the top holdings inside a particular portfolio, and really helps us to sort of help our clients make better investment decisions by looking at that. And I think as we reflect on these themes for the year 2025, it will continue to be pretty crucial to understand what that overall investment allocation is and make sure you're not getting too concentrated or too far afield in any one particular sector. Other areas of investing, you think internationally, certainly global trends would say that the international markets are perhaps priced more effectively or cheaply than the U.S. market. So certainly some opportunities there, particularly as you see some of the international industrial titans wind up increasing things like capital expenditures and things like that. So you could see some real opportunities there. On the more aggressive side, if you're investing in smaller companies, the valuation of smaller companies is kind of at 20-year lows relative to large companies. It's really been a cycle where large companies have dominated. So certainly some opportunities in the small company side of things. Emerging markets, preferences for India over China. China has some massive debt problems along with its demographic problem. India doesn't have those problems in the same form and function. So those are just some of the themes that we would encourage you to be thinking about for the year 2025. Obviously, since we do the program every week, you're going to hear more about those as the weeks and months advance during the course of the year. Bottom line on this, the key takeaway is to make sure your investments are well positioned, right? To take advantage of these themes. The start of the year is always a good time to sort of dig into it and do a reevaluation of your overall mix. And if you're not able to get a detailed report on what that is, the folks here at Nelson Financial Planning would be more than happy to do that for you for absolutely free. Take whatever it is that you have out there, run it through so that you can get a pretty good handle on what your sector allocation is and what your individual company allocation is. Might be a worthwhile tool for you to take advantage of us for that. So to do that, just visit our website, nelsonfinancialplanning.com. We'll be back after these messages.